R.V. Verma, Chairman and Managing Director at National Housing Bank, to talk a lot about that sector. Thanks very much for joining in, Mr. Verma. To start off with, the media reports suggest that NHB is seeking to allow lenders to give 90% of property value as home loan for loans that carry mortgage guarantee cover. Can you run us through the rationale?
Yes. In fact, as you know, the current regulatory prescriptions for the banks and housing finance companies does not allow them to give loans beyond 75% loan to value for properties, for loans between this above 75 lakhs, and for loans between 20 to 75 lakhs, the LTV, that's the loan to value ratio, is capped at 80%. While loans up to 20 lakhs are allowed to be given at LTV of 90%. So, as you know, that for loans above 20 lakhs, where the LTV is capped at 80% and 75%, could mean a significant amount of equity from the borrowers to be brought in. And we feel that, with the prices going up and, affordability also taking a hit sometimes for majority of the borrowers, for loans above 20 lakhs, if a person has to bring in 20% of his own money, his own equity, that can be quite a substantial load on his pocket. And no matter how much he tightens his belt, perhaps it may be very, very difficult for him to build up equity of 20%, say on a 1 crore or 50 lakh. On 1 crore property, he has to bring in, say, 20 lakhs of his own equity. It can be a tall order. And by the time he builds up this equity, probably the prices would go up. So the strain on the borrower can be very huge. So we have a good product called the mortgage guarantee, which has been introduced and being operated through a corporation, through a separate company called the India Mortgage Guarantee Corporation, where NHB is a lead investor in the equity with 38%. And we have the IFC and ADB as other co-investors, and Genworth, which is the technical partner, they are also an investor of 36%. So this mortgage guarantee, it is globally recognized as a credit risk mitigant, and we are proposing that if the lender chooses to buy the guarantee cover of the mortgage guarantee company, which is recognized by the Reserve Bank of India, then in that case the loan to value should be increased, say from the current 80% for loans between 20 lakhs and 75 lakhs to as much as 90%.
Right.
So
Mr.
that
Verma,
can be a huge benefit to the borrowers. Yeah.
Yeah. So my question
and
is,
a win-win for all the stakeholders, including the lenders.
Sure. So my question is,
Yes.
how do you decide which are the borrowers which are eligible for getting the mortgage guarantee? Because to my mind, this increases the risks of default as the risk is not on the borrower but on a third party.
That's not what normally happens, though it is perceived as if that there is moral hazard in this, and once the borrower gets to know that his default is guaranteed by some other institution, he will tend to default. The powers of proceeding against the borrower continues to remain with the lender, and at best the guarantee company will step into the shoes of the lender in case the property has to be foreclosed. So the major deterrent for the borrower for his default is the fear that his property will be foreclosed. And under the SARFAESI Act today, the lenders have speedy foreclosure processes are given to them. So that is a major deterrent. Globally it has been known that the borrowers understand the benefit of mortgage guarantee, and that's a very important link in all this process. Once the borrower understands that because the mortgage guarantee cover it's possible for him to get a loan, number one, and if it's getting a loan, then it's possible to get a higher amount of loan with the mortgage guarantee cover. So the borrower doesn't mind paying a little fee for that also, for all the benefits that he contracts if his loan is guaranteed by the mortgage guarantee cover. So in short, the borrower understands and recognizes the value that he is getting out of the mortgage guarantee, and which is very substantial in terms of cost saving for the borrower. And for the lender,
Sure.
since the credit risk is covered, this acts as a risk mitigant. So lender can also advance this loan at a more affordable rate because it's a risk-based pricing at the end of the day.
Sure. Mr. Verma, just a second. I just want to take a minute, just point out the European markets have opened. I just want to show what the European markets are doing on opening tick before we get back to this discussion. A couple of more questions. But Europe has opened. FTSE CAC DAX will come up on your screen in just a bit. And there, open with a bit of green. So no red on the screen at least. So that's a sigh of relief, though it's a minor tick of green that we're seeing on the European markets. But that's the opening tick. Europe is open with a bit of green. Mr. Verma, would this mortgage guarantee cover, I'm just using the term loosely, be available only for the first home buyer, or would it also be available if a singular person wants to buy multiple houses?
It will be available to all home buyers, irrespective of the number of houses they're buying. Those detail or refinements in the product hasn't really been conceived as yet.
Mr. Verma, my essence of asking that question was, wouldn't that lead to speculative activity? I mean, though Fannie Mae and Freddie Mac are really large examples and probably not true right now or not completely in context right now, but this gives rise to potential speculative activity. A borrower will know that his property is guaranteed. He may go out and buy 2 or 3 properties because it is guaranteed by an institution, and therefore just speculate in homes, because the value of the homes, as you said, is not too large. It's around 15-20 lakh rupees.
Yeah, actually, the lending for a third house today is by regulations is called commercial real estate activity, and it has to be provided against with greater amount of capital and higher risk weight also. So loans beyond two properties, as it is perceived to be risky. So the attachment of risk weights and provisioning will continue to be very high. So lender in any case is dissuaded from, or rather he's disincentivized by way of regulatory prescriptions to lend to one person for more than 2 houses. But it's just that it's not mandatory that the lender cannot give loan for a third house or a fourth house. If he does it, there is an association of risk with that, and against which he has to provide the capital. So as far as the system is concerned, it is well cushioned, and there is additional capital on top of that. And if there is mortgage guarantee, we haven't gone that far yet to really consider a mortgage guarantee for a third house. It's more for the first home buyer who is finding it difficult to actually build up his equity to start with, and then also to extend this comfort to the lender that it's a great risk mitigant, and where under the risk weight and provisioning by the lender also comes down. So it's an incentive for the lender to contract to get the guarantee cover, one, and for the borrower to by way of his being able to get a loan at a little lower price and also a bigger amount of loan. So we are looking at essentially the first home buyer, which is very, very important. And if you look at the probability of default study which we have done, it's the middle to upper end of the market where the default rate is very, very low. It's the lower end, which is loans up to 5 lakhs, where the NPA level is very high, and which we are trying to address through a separate scheme called the Credit Guarantee Trust Fund for Low Income Housing, which is a government-sponsored program, and where NHB is managing this fund. So the guarantee cover typically, where we are looking at, if the guarantee cover is to be extended, there is an incentive for the borrower if the loan to value goes up from 80 to 90%. This is a global phenomenon, and we have seen various other jurisdictions, like we have in Korea, where the above 60% LTV, there's a mandatory requirement of guarantee. In Canada, we have above 80%. All loans above 80%, there's a mandatory requirement for mortgage guarantee.
Mr. Verma, I get that point, but we're running out of time, which is why I just want to flag off my last question to you. 30 seconds, sir. If you could just talk about the asset quality pressures, because that has really been seen increasing for housing loans. What's the future outlook here?
The growth will continue to be at close to about 90 to 20%. And this year, 2013-14 closing also has seen a growth about 20%. To our mind, given this kind of trend, we see a similar growth story in the unfolding in 2014-15. As far as quality of housing loans are concerned, the assets, retail housing loans, it will continue to be robust. Today we have the bank's gross NPA at about 1.81%, while the housing finance company is 0.7%, which is a very good story, and this is a good incentive for the lenders to continue to grow their books on the retail housing loan front.
All right, Mr. Verma, great having you with us on the show. Thanks so much.
With just one last view with the mortgage guarantee cover, we expect that there will be further expansion in the retail housing loan market, accompanied with stability. And these are two factors which are very important, and we believe that the mortgage guarantee, it has already gone off the ground by a contract between the IMGC and the One Housing, and which would be definitely a very good example for the industry to emulate in future. Thank you.